Hello. Good morning. Welcome to another ES Futures trading stream. Today is Friday, April 5th. Um, I'm going to apologize in advance because I don't think I will be able to stream too much time today. I may cut the stream short. Right to the point. Okay, we have now this. We have a market that has penetration in this range here, in the lower range. I hope if you have been following, um, you've been following the past streams, you would see, you would know what I'm talking about what ranges I am referring here. You know, I have this upper. I'm going to put more days here so we can see more. I'm talking about this range in the upper side, this 7-day range, 1, 2, 3, 4, 5, 6, 7. Yeah, I will call it 7-day, and this one, this 10-day range down below. Now, I am going to take a screenshot as the first thing that I'm going to do today. We had the number is out. For what the market is doing, maybe that number is within the expectations, maybe just as the forecast was. I'm going to check it in just a moment. Just give me a second. I'm going to do right here. Overnight inventory is 100% low. But also with after a break like the one we had yesterday, this is the break that everybody was waiting for. I hope you were not fighting the break. I hope you were not going long here. Because this was it, right? This is we as traders live for these kind of days, right? We may have been struggling or having really short or small gains throughout this, all this time here. It can be 2, 3, 4 weeks, and then we have something like this, right? And that's what we never know when this kind of days can happen. It was a good break that has good tempo, good volume. Unlike this one, for example, here, unlike another ones that we have in the past. That were very questionable, and it just made it. You could feel it that it was different, all right. I hope you had that feeling when you say to yourself, "This is it, right? This is it. I have to go. I have to join the movement. I have to be here. I need to find a way to jump in, just to jump in. That's what I wanted." If I have time, I'm going to do a little quick replay. But let's check. Let's check what the other markets are doing. This is very important as well. Okay. What is this? Oh, the VIX. The VIX has a big jump yesterday. We have really low. Come on, man. 12. Look at that. This is very complacent market here. 12. Now we are around 16, something like that. And let's check, for example, what the other markets are doing here. This is something that I didn't like it. Gold, having this rally here, because it's gold is seen as a way to hedge, right? Somebody's hedging, funds are hedging, but they're expecting something bad to happen. And also after all the inflation, the gold tends to keep value. This is fair. I believe this can be fair value for gold, and something that is not playing with with the Fed plans to control inflation is crude. Crude oil is rising here, right? We have rising. Um, we have I don't know what's going to happen here. We're really close to this high. Summer is coming, and this is not going to be good, right? This can increase. This can be playing against the Fed or against the Fed doing rate cuts anytime soon. Uh, the bond market, the bond market also is kind of like at this really critical levels here. This can be a go no go level here, and also it's trading in this trend here. Right? We have this channel here, same for this one as well. Um, and just in front, just 1 week away from the beginning of earnings session, what these markets were all doing in the mind. This is no good. What happened here? Look at this. This is a tremendous break. How this market opened, the bond market opened. We have short covering. Short covering weakens the market. We have here. You can see the P shape here. Short squeeze of these shorts here, and then the developing of this trade here, or the weakening is being reflected here. We may have some, based on how this market was trading, we may have some sort of long liquidation here, maybe trading sideways. Can this market go downwards? I don't know. That's in the books. Let's check again the daily. This is interesting here. It's very low here. It's getting close to this. This level is going to be tested again. It's very close to being tested here. Okay. Taking this level out targets the opposite side of this range, which is this one, which is not good for the markets. Doing that, this is going to put some pressure on the markets as well. Now, let's check before going to. Okay, let's go to the other indices. All the indices yesterday closed under very particular, very very weak areas, right? Some sort of go no go level as well. You can see, for example, the ES, buying exactly from previous breakout. This didn't hold yesterday. Was sold from the trend line, was buying from the trend line. It just couldn't retake this trend because the potential destination was up here, right? It just didn't do it. Now this can be the beginning of something. Nasdaq as well. Look at this low. Look at where this low is, right at the 50. Right at the 50 SMA. This also is quite particular weak level here, and the potential destination of this trade here can be this low. And notice what do we have below this, right? Below this low, we have below this reference here, we have another potential support resistance here, but this one is extremely weak because we don't have anything here. There's absolutely nothing here that can hold this market, that prevent this market to trade towards the 100 here, because there is a gap here. I'm going to remove this one so you can see there's a gap here. Look at this gap. Just look at this gap, right? There's a significant gap there. This gap right at the next support level. We don't have anything else here to see after, right? This is extremely weak. We may have some downside here. The next one, the next support is the 100. As you can see here, this is 70 to 78. What I'm going to do, I'm going to mark that in my Nasdaq charts. 17 to 78, 70. Ooh, that's way lower, right? That's too far down. Who knows? 17 to 78, 17 to 78. That's a 100, 70 to 78 down here. That's a 100. This is the next one. And right now, what can be a potential support for Nasdaq is this 1830, right? Which is the 50. 18, and this is going to be really interesting today. Oh boy, look at this. What are you here? All right, I'm going to put it here. Look at where this market is at. Well, this can there is nothing here, right? But traders have the tendency to see these levels as areas of support or resistance, right? I'm going to buy from that level, I'm going to sell from that level. That's for Nasdaq. The ES has the 51.8. Let's do some adjustments there as well. $52.8. Come on, man, really? Let me check that again. Let me check that again. 51.8. 51.8. Boy, I thought we were right there. It's 51. It's way down here. 51.8, which is here, right? This is the 50. This is the 50. And that will mean very close to the next support area, which is 51.2325, which is February high. I will see why we got. I'm not saying the market is going to break, but I'm seeing what I do here. This is kind of like the technical part of trading. Where this market can have the eyes or traders maybe seeing that, right? Notice also how weak this low is in the Russell, and the Dow, of course, also buying from the 50 here. Now the Dow actually took the 50, so there may be some downside continuation here or some rejection. If the market comes back up here, the next thing I wanted to see is we have this level, which is exactly the 50, as you can see. If I just put it here, it's just a 50 here. Coming back inside this two-day range here. The gap has not been closed. Now, downside continuation. What happened? Now, before going to our market, to our time frames, let's check what big tech is doing here. How big tech is. I'm checking this because there's a lot of interest in these companies as well. And look at this. Meta, extend to the right. Meta and Netflix. Just a couple days ago, we were talking about how weak these companies look, how these charts looks, and now just a couple of days, everything changes, right? Just after these highs here, they were extremely weak. These are weak shorts here. Once these shorts have been removed, we have stronger traders is taking that place. But also notice where has been sold from, right? Same goes for Meta. The weakness, it is amazing how weak this stock is. But it's right at support Apple, right? And this is quite a particular. I mean, there is something special about this company because there's a lot of capital here in this market, and it seems also like a lot of money has been moved has been drawn from this company to this one here. It's holding. This is Nvidia make a second attempt to take the 1,000. It just couldn't do it. Right? There's another liquidation here that's in. I would say it's in progress here. It's in liquidation mode. No, I won't say it's in liquidation mode. This is still a range here in Nvidia. Now there might be probably another attempt to reach the 1,000, but I wonder now. Look at this. How many times this market has tried to close the gap, and each time, the shorts have less and less here. Let's see if there's something here to the downside, if there's something here, if this gap's closed, and the 50 is also very close to that level. And oh boy, now this looks, Amazon didn't look bad, but now in this company, it's at risk, just like Netflix was when it was down here. What's going to happen? I have no idea, brother. I have absolutely no idea. Now, let's check our market. Let's check the ES here. Having the ES, there's no change in the monthly. The trend is still to the upside in the bigger time frame. The market is buying right at support in the weekly. It's right there. The low 95.25, 94. This low has been taken by 1 point. All right, 1 point. And that's enough. That's enough that low has been taken. The range has been taken out. If the market comes back inside that range, remember we have an inside day to the upside here. The opposite side of this range has been reached. Also, this is support. This can be seen as a support. We have the same thing here in the daily. All right. The thing in the daily, we have the 50 really close by. This, what is the 51? But another 100 points doesn't look bad here. But and that's what traders are looking for. I will be watching today after the tremendous break that we had yesterday. The next thing, what is the next thing? Okay, what's the next thing? What do you think is in the mind of traders? This market is going to keep breaking. That's the last thing they saw. That's the first thing they're going to do today in the morning. Right? This level, the 50-50, around the 50-50, something like that. I call it the 50-60 if you want to be exact. This is a decent, just a 5% pullback that the market can have, which actually is something healthy, something good for the rally. Notice how this break, how much volume this has, right? Now let's check another break. This one. About the same volume. Another break. A little bit higher, but about the same as well. What other break we have? What do you see? This is another break. Good volume here. Rally. and break here. For the magnitude of the break, notice how big this bar is. The volume wasn't that much. Only, I think it was, let's check how much that was. Was 13%, 10%. I mean, look at this. You know, it's higher than, is the highest in the last 10 days, I believe. No, it's not the highest in the 10 days, but it's in the higher side. But it's not that much, really. Right? It's really not that much. 10% is really not that much to be considered like serious selling here. There is no serious selling here. You have seen maybe 20, 25, 30% higher. That would be something really interesting to see, you know, in front of a number like the one we had today. Now, things have changed, right? We have changed in daily, we have changed in the weekly. You know, the next thing, monitoring for downside continuation, we'll see the monthly low being taken out as well. Okay, this is very important. What is this low? 63. What is 63? Around 5% pullback here. Can you see? 5%? 53. How much is this percent? This 5% actually? 56, right? 56. 50, 56. Let's call this 50, 56. This is going to be very interesting. I'm not saying something is going to happen today, but down the road. This is 5% pullback. 5%. 5% pullback. General 56. Previous all-time high as well. And a very interesting situation here. And a lot, you know, this level here, I got this level marked in my charts as well. This level is very interesting here, same as was this yesterday and this area here yesterday. I'm going to save my charts because I don't wanna lose that information. Sometimes my chart just crash. I don't wanna miss that. Now, regarding today, regarding yesterday, the upper side, we don't have excess. We have an all-time high that was made in the overnight. We have no excess up here as well. No excess. That's for the upper side. And the number itself really could not have any kind of serious spike either to the upside or to the downside. I suspect, you know, yesterday's break has a lot to do with that. Now the market is open. Let's have a look. Look at, I mean, we have a spike to the upside. What is very interesting from this bar is how, you know, look where the low it bar is. It's exactly this low here from this day. Something like, you know, you can see this what it is. This is something no good, right? Now we have an inside bar yesterday. My bad. This is not an inside bar. You know, we have a serious liquidation yesterday, and inventory is super short from yesterday. Very short from yesterday. That's the first thing. Okay, very short. All this inventory here, all this inventory now has been taken out. the first thing in the upper side, closing this distribution here, next one, this one up here, which is also support resistance. And after days like yesterday, it's not unusual. It's not unusual to see some sort of sideways trading, which is a rebalancing, of the short inventory. Now, short inventory that can be traders taking profits, hedging, or doing whatever they need to do, right? I don't like this kind of, they really piss me off. It's very distracting. Come on, man. Let's see if I can. Let me open this thing again. I don't like when my charts mirror the current period. I guess I have some form of obsessive compulsive disorder here. Now, have you checked your emotions today? So what are you expecting today? What do you think today? Hey, yeah, how are you, man? Hope you're doing good. Have you checked your emotions? What are you thinking is going to happen? What is in your mind? Are you regretting that you were going long yesterday? Are you regretting that you cut your profits short? What are you thinking of? Remember, what happened yesterday has nothing to do with what is happening right now. The last trade is over. Let's move to the next one. Really slow opening. What I have here, this is what I am, the way how I am thinking. We have this big break here with some volume. This significant break. I think this market can have some sort of range here, or establish a downside range, or start with. So the market can trade sideways here before it makes its decision, or before it makes its next directional move here. Now, I apologize for the noise that you can feel you can hear in the background. I have my kids are home for spring break, and that's also the reason I won't be able to have the stream for longer. Now, all of this short inventory, remember, this is a really questionable level here, but also this can be seen as a support. The way how I thinking here is there might be something here, some back and forth here, right? Before earnings start poor next week, we will have earnings. Tesla has started with some negative news, and when things are bad, usually companies start to have this yearly release, like a kind of like to damp a little bit what can happen afterwards. Intel also has reported some missings there. I don't know what's going to happen with the other companies. Now, what I am watching here, is this market is a continuation of yesterday's, right? This market just have a break. Notice how thin this profile is, right? We have one distribution on the upper side, which are really far from 1, 2, 3, 4 distributions. Right? 4 distributions here. And what this day is doing? Do you remember this day? How many distributions this day have as well? I guess this has 5. 1, 2, 3, 4, 5 distributions here. Right? I hope you have not forgotten about this day. Notice how much we have to keep this piece of information, in the background for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. 11 days before we can use the information that we were carrying here. Now, yesterday the market gave us there were some clues there, right? This area here today, during this day, the market didn't care about it. Yes, it just went through really fast and come back really fast also at the closing, at the opening and at the closing. Early in the morning, late in the afternoon. This was a potential area also, and that because we have a range up here, and we have another range up here, balance guidelines here. Which one is going to be taken? Which high, in this case, or the low is going to be taken? What the market is going to pay attention to. The market tried to take try to make a new highs. It just couldn't do it yesterday. Now, once the market has this break, you got to be able to pull that information, from your memory. You have this one here. You have this one. This was the latest. It was easy to remember what happened here. To go with the movement here. Also, we have the support resistance here. But I believe in hindsight, I think this was the most important thing, because the market really did a lot of back and forth here between this high and this low. High, low, like 3 times the market comes up here, down here, up here, down here, down here, before it had downside continuation. And this is the job of bigger time frames here. What we saw yesterday, you can see, if you can replay this, you will see how the market really have these pushes, right? These waves, right? Comes down, let the market, kind of like a breathe, right? Release, some profits are taken, another traders come in. The same thing happens here, right? There's some back and forth here, and then another push to the downside. And it was really nice to see. These days, you don't see this. I don't remember when was the last time I saw this kind of day. But the way how yesterday trade, that's a good break. That's how a break, there's there's not a book that says this is how a break must look like. But if there was something like that, I guess this is a good day. It is a good day to see, to feel the market, to feel the difference between time frames. Participants here, the shortest time frames versus bigger time frames. I don't know how big, right? And also early in the session, I hope you have feel this too. You can see, right? Or you can feel that this market was trying to find support somewhere, right? I don't know how to explain that. But you can feel the market was trying to buy it, or traders trying to find something to set their feet on, right? And they just didn't find anything here, right? Same thing, And the next thing, we have a short covering here. Now, I'm not saying that I saw this coming. I would never expect something like this, happening yesterday, especially on a day like yesterday when markets are thin before the day. But we never know. We never know when things are going to happen, and you got to be ready. The best thing to do when or at least that's what I found. Right, for me, works the best. The best thing I can do is try to start every day as neutral as possible, as neutral as I can be. There are some days that I have some biases, but I speak about that just to get that feeling, that bias out, right? Just to verbalize, and make myself aware of what I am thinking. I am that I am expecting something, right? Which actually can be dangerous, right? When I expect something, what happens is I already made my mind, what I want to do, and that's dangerous. Another thing that was happening to me the past week, the couple weeks, was I was really anxious. I was really anxious. I have a lot of anxiety, and I couldn't explain why is that. I am going through like personal issues as well, and I think that has a lot to do with that. Um, but I am feeling better now. I'm feeling better now. I don't feel that. I thought I also was drinking too much coffee. I was drinking one cup of coffee in the morning, another one kind of like um, around noon or a little bit somewhere a little bit later, and that thing I think that has something to do with that as well. I stopped drinking coffee. Today I have another cup of coffee after a couple of weeks. Yeah, but because it's Friday, we have some time to I can stay awake a little bit later today. Now, regarding, if you have any questions, please let me know anytime. You can see I am not in a hurry to place anything here, just like yesterday. Just like yesterday, you have a big gap here. The trade was to the upside. I did. Did I? Yes, I got a short by accident. But I was looking to the upside yesterday. I was looking to the upside. Where can I enter this market? There was something here, but in this market, and this is quite. It happened twice yesterday. Now, now now I just realized it happens twice yesterday. I just realized this. We have this range here. Market going lower, 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 and we have these lows here. This period corrects that, takes the low, gives excess at the bottom, and that's a trade, right? Taking, because the market was aiming to close the gap, and this is kind of like half of the gap. Can you see where this is? Around half of the back, right? Half of the gap. You see, I see this quite often, and then some sort of bit of rally starts from here, and I thought this was a potentially trying to set or to have a the ultimate destination of this trade was these highs here. Non-excess here, non-excess here, weak here, right? I thought that was it. And I got a long here, I got a long here in this area. But for upside continuation, the rally wasn't good to begin with, right? It wasn't that good. And when the market came back inside this range, I just let it go, right? I kind of like scratched at the trade, and monitoring for continuation was closing this gap here, closing the distributions here. It came back inside the upper distribution, and the next thing the market has to do is come back to the opposite side of this distribution, which was this daily high. When it came back inside this range, I let it go. I just let it go, and then you have the inside bar, the resolution. I was expecting something to the upside, but it happened to the downside. Right? I noticed this is two. That's why I say it happened twice. One here and two here. And there's nothing that can tell me here this is going to happen. And that's why nobody can teach you how to trade because there is no rules here, and all that why I say here I learn from Jim, right? And all what Jim says, he learn the things that he teaches the things that he learned in his 50 years experience. But also those things are just as he says, just those are just guidelines, nothing else, right? Just guidelines. If you were on if you can check Jim's webinars, you will see also, you will notice sometimes that he struggles. And also, I have this thing, right? This that I feel like, he was learning too, right? And that make you question what are you learning and from who are you learning. And the answer, what I realized after that is that he was actually learning. And what happens is markets are always evolving, right? And good traders are always adapting. That's why things that don't work all the time, because markets are always changing. We have a new trope of traders now in the market. I think the traders that were here 2-3 years ago are not here anymore. I think we have a new group of traders, new traders now. And these traders, as somebody say, haven't seen a pullback in this market yet. Have a nice rally, since last year. I haven't seen a pullback there. Because, this is buy the dips, right? Buy the dip and you're going to be fine. That's that's what they have learned. And the same thing, that's another cycle as well. Same thing is happening over and over. It's unbelievable how things repeat. Now this level here, this 52.30, can be something to be aware of in what's happening. Let's see if this market can take this, because there was a significant, really high volume here from this day. It's gonna be too far back, but the traders that were aiming for a breakout here, now that the trade didn't work, they're aiming to the downside. Now that's just, again, those are just odds, right? That's I am using that as a way to see potential trades here. Oh, I was talking about Jim, right? Jim was actually learning as well. He was learning the market we were at the time. I think this was 1 year ago or a couple of years ago, right? Because that was new for him too, okay? And later on, I think he says something like he didn't see that market. There was a second time that he saw a market like that. Yeah. But that realization didn't came right away. Right? It takes time, and you need to adapt as well. One mistake that we traders do is when we have this kind of breaks, for example, traders have a tendency to increase size, and I was thinking yesterday about how that can relate, in poker, to the fact that when you start playing poker, I did play poker because that was I want to learn about the risk, how they feel, right? Because I hear so many times from so many different people that poker players manage risk better when they start trading. I think to myself, why is that? You start seeing, I realized that there is some behavior in traders, in poker players, that the ones that have a tendency, there are some people that have a tendency to go all in, right? All in. That's why you go all in, right? when you go all in, you got absolutely sure that you are going to win. You have 100% odds of winning. And do you know that? Right? You can lose everything in just one bet. So in trading, for me, that relates to increasing size considerable. If I am trading 1 or 2 lots, suddenly I will be trading 10 lots. That's too much. I hear also, I read also about all traders, just saying, and this is common, right? They say, I have seen many bold traders, but I haven't seen any old bold traders. So that says something about that, right? You can have some winnings there, some good winnings, but there's going to be one day that can take everything away. And I then use that for my strategy. How do I relate to my strategy? That will be, breaking the rules in your strategy, not following, not sticking to the rules, to whatever strategy you may have, right? And that's painful, right? That's painful to learn. And that's the thing about trading, right? Everybody you can hear, and in my case, I was conscious of that, right? Hearing, trying to follow, right? But trying to follow what somebody was teaching me. But you kind of, or in my case, I had to go through the thing, right? And it happens, it seems now that I see other traders is, man, it seems like it has to happen to everyone. I think that I can relate that to something that Jim all says all the time, right? Traders usually, when they start to learn how to trade the proper way, usually, or when they don't learn the proper way, usually, you run out the money, out the capital before you actually have a really solid chance, solid fighting chance here. I gotta be very careful. Forgetting what I had learned was really hard. It took me a solid year to do that, and that was just to to erase all the crap that I have learned. Now that you have that blank slate, you can start building from scratch. And that thing that you quote unquote forgot, it's going to be always there, lurking in the background, trying to come back, right? Until you build some solid, good, healthy habits here. Now, how much volume do we have? 55. We didn't have good volume yesterday in the morning. We see that it's going to be the case again today. Now, I have two things now from this market. Extremely short inventory from yesterday. This pullback or the base from the overnight, this thing here. I may consider this market open since this period here. This is when volume really start to come. You got this. How much volume do we have here? Uh-oh. What happened here? Oh, what do I think about M period? It's a really quiet market. Really quiet market here. I think inventory is just too short. Needs it kind of like needs some rebalancing here. There are just think what trades we'll be doing here. There's a lot of trades that will remember yesterday break that will be going short. Another ones will be buying the market just because it's too low. Okay, now I have, let me check the volume. Now I have this volume. From the overnight 17, oh what, oh no, we have 115 and 47. Well, this is pretty much the market started here, 8:30, then we have 9, and now we have 179. Not bad. This is from yesterday. That is history. And this kind of rallies that you may have. Now this is an inside day. What we have here is an inside day. What are the odds? What are guidelines for the inside day? There's a lot of chop, rotation. Odds of rotation are increased. The closer the market opens to the center, the higher the odds of rotation. There's some selling that's coming from this level. Came right there, and there's some selling there. And this thing, what I do, I mean, you don't need this data here, right? It can be distracting. I use this just kind of like a zoom in a little bit more in whatever I'm doing. Oh, if I have a trade, I use this to monitor. Once a trade is in place, on a banner trade is working, I start to see. I come back here to check. Look here, for example, what do we have? There's a lot of pressure to the downside, and a lot of pressure to the downside. But what the market is doing? What the market is doing? So far, we don't have direction, right? We don't have direction here. Yeah. If any, we had one time frame higher, which is over. What's the goal? What's the next thing? It's going to keep going. It's going to go higher. It's going to come back and go higher, or establish something to the downside. To establish something to the downside, the market can come all the way up to here, right? And still we have nothing today. If the market takes this low, we will have something to the downside. Right now, from yesterday, we have an outside bar. This is the second time. This is the second time we have an outside bar in this market in a while. Which was the other one? I think this was the other one. This was to the downside as well. Outside bar to the downside. Market open here, explore above, and close it below. This did the same thing. Open above with the gap, close it the gap, trade it to the opposite side of the range, and close it way below. This is an outside bar. The previous, I think that's the last outside bar I remember. This was going higher, And this was an outside bar to the upside. This one here. Yeah. Open, we have higher, open below, and close it above. You can see settles up here. And then we have upside continuation here. I don't expect much here today, but traders will be expecting, some wild range today, just as yesterday. Hold on a second, I need to do something here. Okay. Oh, I was telling, don't think that I have an advantage just because I have this. All right. Don't get fooled. Don't allow yourself to be fooled by that. No, this is all you need. This is all you need. And even though this is something, this thing is what gives you some advantage actually. No, because most traders don't have this kind of profiles or histograms. Most only have bars, and this is the advantage that programs like Sierra or Windows Trader can give you, because you can actually see where the volume is. Right, there's an auction here, and intraday action. I still don't know what's happening. Right, still don't know. The market open, comes fall below, goes high. I have a weak low here. From the overnight, I also have a weak low here. So it's back-to-back questionable lows here. This is an inside bar. I still don't know. Still this market doesn't have any direction. Like, if any, I have yesterday, I have something to the downside, something really big, price-wise, really big to the downside. But I still need to see continuation. I don't have nothing yet. Right? And this is hard, right? Look at the pressure that this market has to the downside. Really. Lot of pressure to the downside here. We have an upside movement. Intraday wise. Now we have an inside bar. Stocks just starting. Volumes on the lower side. And then I will just say this on the side. I don't need to see that much of that. Oh, come on. That was it. It was this. All right. And sometimes these days, just grind. It is not unusual to see a market grinding is way higher. And this is the third Friday. This is the third time the market could not make a new high over the weekend. Right. We are very close to establish something here, so establish a directional move. Do you use the distribution from yesterday as reference? Yeah, I mean, what I have from yesterday, this is extremely very emotional market here from yesterday, right? Down 1, 2, 3, for here, and you could see when the market was taking these lows, was trading. I guess it was here, right? Now you will see, this market traded halves in the 5200, you know, traded halves in the 5200 here, and that was, you could see the market pressure, doing. Okay, we are so close to the 5200 that that's going to be taken, right? More while I use these distributions, the main thing is kind of like the emotions, right? While high here, FOMO here, trapping a lot of people, getting very emotional, right? I want to get in. I don't want to lose this movement, or get me out, right? I am so deep underwater or whatever. And what happened yesterday? What happened yesterday has a lot to do with what happened here. This day, compare, if you were here this day and if you were here yesterday, you will see how different these two markets look like. How weak this selling was, how weak that selling was, and how strong this selling was. This one relative to this one, this day. Oh, and that's another key also. That's another element of trading. We always have comparing what happened to something, right? This can be strong relative to this day, but can be weak relative to another day, for example, right? To a general break, this doesn't look good, but relative to yesterday, that's strong. Relative to yesterday, it has volume, right? Relative to the previous day. In general, relative to all the days that I have accumulated in my memory, it doesn't look that good, right? It doesn't look that different. Not that it's bad, but it's not as good as other days that you probably have seen in the past. This actually, I noticed how yesterday or the past days, I guess we talk here or here, we're talking about how this can be a break, how this can be a break that the market did before it can rally further. Market was just, inventory just got too long that it cannot rally anymore, and it has to break. But actually, play was quite the opposite. Inventory here just got too short. Here just got too short. It cannot break further. Right? These shorts were taken out, and then stronger shorts come into the market and do the break here. Right? And this is the how the uncertain is the business here. We never know when these things are happening. If any, I was expecting this kind of movement today, to be honest, right? And that's the key here. When you expect something, I am actually, setting up. I have already set my mind. This can't happen yesterday. Just too thin. The adjustments are made a couple days before, maybe 3 days before. If there's anything, it happens during the news. I never expected this to happen yesterday. And doing the mental adjustments is what is, is the thing here. Now we are having more pressure to the downside. I want to see that holds. Notice here, for example, right? There's no taper here on the upper side. It doesn't mean the market is going to come back. Oh, come on. No, this could have been a good location here. From this place. Fields is taking the second time. Okay. Nasdaq has a trend to the upside. The A high has been taken. What's happening in the bonds, in the bond market? That would be interesting to see as well. Oh, this market is recovering here. You know, it came out of below this range, below yesterday, and now it's come back inside, which targets. Oh boy, look at this. It's open. No, this is the high. My bad. This is the high. It opened inside, looked below, coming back inside. Actually targets the opposite side. Go. Oh boy, God, they're having another rally. It made a new it made a new high in the overnight. Did it? Yeah, new high in the overnight. It's good also this high is going to be taken. Crude is getting weakening. It's getting weak buying here. Buying from the 50. Short covering. Potential short covering in dollar. Seems that look at this market is buying here from the 50s. If I found support here. Oh boy, this doesn't look good. This can be some selling here in down. I like Nasdaq, which has found support. This can be resistance for the Dow. And the Dow and the ES kind of like have a tendency to trade in similar ways. All right, now we have a weak high. If I had a short here, that was it. Still no direction here. Weak selling here, but no direction yet. Monitoring for, I'm going to close this. This is history. This also. What's the next thing here? Is this level here, the 47, 52.47 or 52.50. Oh, come on, look at this. We don't see value in days like yesterday because it's a trending day. Try to see these 2 days. If you join these 2 days, what is this, right? This would be a rally from. You have significant break. If there was no overnight, this is a break, and now we're having a rally, right? Rebalance. This could be a rebalancing of short inventory. And what traders do when there are breaks in the market, when the market have downside, that have a directional move. In a downside move, they sell rallies. In the upside move, they buy breaks. That's a tendency. That's a tendency. Where is settles down here. There was no contraction to overall inventory. The 5200 is right there again. I use the same thing as yesterday. For example, we got 5210 here, 5290. Where's 90 is here, right? This is the area of risk, right? It is better to be long above the 5210 and short below the 5110, 5190, because traders see that 5200 as a potential areas to buy or to sell, right? There's a lot of back and forth before the market actually really makes up its mind. Now this low is very, very questionable. Notice what do we have here. We have no excess here. This is poor. This is no excess here. And what this does is just adds more to this, right? And what another thing, this is not just a poor low, but it's also weak because the 5200 is there. So this low is exponentially weak here. Right? Now the upper side, we have this non-excess highs. Now, can this be the break the market needed to rally further? God knows, man. God knows. Only who knows? Now the volatility today is 16. When we have higher volatility, ranges also have a tendency to be wider. With 20, we may have 1% range, 1-2% range. 30, around 3-4% range. Something that I did, for example, if I can tell you something, I think you're doing something good, right? Building your own opinion, and when we do that, we may need somebody, that can guide you, or to pull you back to the to the path when you just steer away. But it's really important to have your own opinion because you can make the adjustments. James James is a really good source, Unfortunately, I mean, the good thing is he has one video a week. That video used to be a tweet. And before Twitter had this, they were only like 40 characters, something like that. They were really short tweets, right? But there was a lot of information on those tweets. I remember those days. When Jim started to do videos, wow, that was amazing. There was such a treat, right? Having a video, even though they were really short, 1 minute, 2 minutes, a really short video. But compared to the tweets, there was a lot of information on those short videos. I use him as a benchmark. Right? I follow the market every day, take my notes, have an opinion, have an idea of the market, have an opinion of the market, and then I contrast what I do to his, right? And sometimes, at the beginning it was, boy, man, how he can see those things, right? It was, for me, it was really kind of like impossible to get to that level. Boy, I will need like 40 years to get to that level, right? And there were people like you. I remember fellow trader, fellow mentee as well. They told me, man, they said you're good, right? You don't need gym anymore. I said, what? Are you crazy? But why he says that? And sometimes, other people see something in you that you don't see yourself. Maybe because you are too hard on yourself, too harsh on yourself, and sometimes that happens, right? Sometimes that happens when, for example, we have another jobs coming into the market, expecting to do huge amounts of money, right? But when we don't have time to be in the market, we just set tremendous expectations on our performance, and we are just putting too much head on our shoulders. We have to lower our expectations, not because it's something lazy or trying to be, not setting enough high goals, but just to be fair, with the amount of time we may have. Because some people, when we begin, we may have another jobs. And let me tell you, I did a mistake. My mistake was to leave my job and go full into this business, because I thought, right? I thought I was going to be able to replace. I kind of like stopped doing. I have a small business, and I leave that and went fully in here. It's not like that, right? It doesn't work like that. I thought because I had 10 years or 14 years experience in business, this was going to be a piece of cake. But every job, every business has its learning curve. That's the truth. That's how it is, and we all need to go through that. Right now, if you cannot be in the market full time, you will be part time, and you need to allow yourself more time to do that. Right, not to be that hard in you. You know, when we set this expectation, we become just desperate, right? Desperate for wins, right? We got to win. I am losing too much. I am losing so many times. You know, I need a win, right? And that thing, you know, puts tremendous amount of pressure in our, in our brains, in ourselves, and it is really, it can really hard. You know? It really plays against us. Really plays against us. Oh, thank you, man. Thank you. I really appreciate your comments. Now, what something that I've learned from Jim as well is, you know, the learning process is really important. You know, when you begin, I haven't read his first book. You know, not the first book, the second book, right? Minds Over Markets. When you start, right, the learning process, he said the learning process, the beginning is a novice, you know, and really to be novice for me was, you know, that first year when I forget, just when I forget, when I realized I was forgetting what I have learned before, that was the beginning for me. That was when I was novice, right? And it was very frustrating, very frustrating, and really, you know, I feel so bad how much time that takes, you know, because then the next step is beginner, right? Next beginning, then you become confident and proficient and expert. You know, and the beginning stage when you start to learn what to watch. What do you watch, right? What do you watch? When you can control your anxiety, when you don't have this, we always have this FOMO, always, because that's emotions, right? And we as humans, that's part of us. That's how we are. Only psychopaths don't feel that, right? People that don't have feelings will not feel. Sociopaths will not have that problem, but the vast majority, if not all of us, we do have that, and we have to deal with that also. No? Then you become confident, and the next step, right? Confident is when you start to see the traits, when you start to see the traits. For example, yesterday, you know, right? You got yesterday. Yesterday is an unusual day. You don't see this kind of days often, right? Boy, come on, man. You know, I could have been short here, for example, right? This is an inside bar. The breakouts to the downside. The next period didn't even get back inside the inside bar, right? I could have been short here, you know. And my stop was if the market comes back inside this period. That could have been, right? You start to see those things, okay? But you realize that the next day, oh boy, or when the market closed, oh boy, you say, right? I didn't see this because I was going long here, I was going short here, going long, short, constantly being stopped out, taking small profits. I don't see this thing, right? And then, but now you see those things, you see. And the next thing is, well, this wasn't my case, right? I don't know how other people, everybody has their own journey. The next thing is, how do I get to this level? How do I, you know, I am 4 hours late. You know, I want to be early. You know, I want to get here. I finally here. And that's why Jim says, you know, even when you realize, Jim says, you know, sometimes it's better to be a little bit late than too early. And being a little bit late, it doesn't mean that you're going to lose the moment. As again, this is very unusual. Right? This kind of day we don't see that often, right? But sometimes you get this, or maybe we take some profits here, right? We take this lower. That's it. That's the movement. That's it. There's no more, and that's it. We start to see those things. Then maybe I close here or hedge. If I close, you start to see the next thing. Market come back inside here. Well, there's potential here. There's potential coming down here. Next thing to monitor for continuation. I have another thing here. I may have closed when the market takes this half back, but then takes this area. I may re-enter. Then you start to see those things. No? And I believe, right, that's when you become proficient. Right? Proficient is when you start to take the trades, when you start to manage risk, right? When you see where the risk is, and risk is, it was hard. This was really hard to understand as well. Risk is not an amount of money. Risk is what the money, from my point of view, risk what the market can do, what the market needs to do to prove me that I am right? Here, for example, I'm not saying I have this level here, but what I was watching was this level actually, this one here, and this is from this day, right? And why I have this one? Because there was a tremendous amount of buying that came in these levels here. 1, 2, 3, some of these 5, I don't know which ones were, but there was tremendous amount of buying here. It's not rare, and this is just by experience, right? The same traders that were long, now that they saw this, the market doing this, now they might switch mind. They might be looking to the downside. Might be. Those are just potential scenarios. Those are just odds. How do I see that? How do I monitor that? If I decide to go short here, why I would go short, for example, right? Because traders will be selling rallies after the break we had yesterday. Traders will be selling rallies. The also short covering are also really good here. If there is something to the upside, it's going to happen really fast. So I need something where I can monitor the market. Right? If I have something to the upside, I have something to the downside. If I go short here, if I go long here, for example, I think my odds are not that good. I bet the long is lower below this. Right? But again, what do I do to monitor the market? I don't have direction here. 2 periods have passed by and still don't have direction in this market. It's an inside day. I have nothing to the upside. I have nothing to the downside. If I check Nasdaq is selling, was buying exactly from halfback. Now the ES is buying exactly from halfback. And that's why Jim says sometimes it's better to let the market sell, and wait until the market shows its hand. And this concept, the market showing its hand, also has a lot to do to what Jim says, let the trend come to you. Suddenly you will just see something, right? Unfortunately, the only way to learn is by trading, right? There is some, you can use prop firms. You have top steps. Curiously, Apex is not here. Therefore, EL2 there's a lot of these ones. The most known are Top Step, Apex. There was another one that we're looking for. It was interesting to see that they were looking for discretionary traders, because what I do is discretionary trading. And what you do here is, the same thing that happens when you open a trial in any trading platform. You have like 15 days to try, right? This is it. This is the same thing. They give you a paper account, but you are risking something, right? You are risking your monthly fee there. Either it's 50, 100, 150. Don't do that. And one of the things that happens when we start learning, is, we learn new things, right? We learn things, and we, just like when, I don't know, I was talking to my daughter about biases the other day, and how we have this confirmation bias is called. What's the name of this bias? It's not confirmation. I think it's confirmation bias. I asked her, have you seen, when was the last time you have seen a pregnant woman? Right? And she honestly couldn't answer that. She had to think about that, right? And after a while, she remembered, I see the other day I saw a pregnant woman. Right? I was my teacher. I was her teacher. It took some time to realize. But we as humans, we are growing as a population. There has to be a lot of pregnant women out there. But we just don't see. We just don't see them. And just when our partners our wives are pregnant, or our sisters or daughters, somebody we know are pregnant or is pregnant, that's when we start to see a lot of pregnant women all over the place. Right? Before that, we just don't see them. And that's some sort of those thing happens here as well. When we learn new things, the firecracker effect, for example, that's boom, you start to see, right? This one say, that's the aha moment, right? And we start to see firecracker effect potential everywhere. Sequential trades. Sequential trades. There's a potential sequential trade here, there, right? Short covering rally, B formation, P formation. We start to learn those things, and they pop up everywhere. Yeah, but that's part of the bias, right? Even though it's not there, because we are learning that things when we see those things. For me, this market is to the downside. This market to the downside, because of the magnitude of the break we have here. I believe there is some trading to the upside. Nothing has changed here relative to the previous days. Look at where this is coming from. I'm going to mark this. Because we may have some odds or some sort of rally from here, and this thing will go away. It's exactly halfback of the day. It's not halfback of previous period, but halfback of the day. Now we have an inside bar, as you say. This period we consider an interior bar, even the high is matching the high of A. Yeah, this could be considered an inside bar. But inside bar as an inside bar for trading purposes, all right, are something like this. I don't have a drawing program here. I use this sketch from. We have a bar here, for example, this one, and the next one is a really small one, relative to the previous bar, right? And closer to the center, for example, right? And now from here we have because the risk diminishes here, right? We have something to the upside or something to the downside, whatever the direction is, preferably the direction of the trend. My major trends, I started the major trends and zooming in down to the daily. Because if we take this long here, the market doesn't have to come too much, right? First, it needs, if the trade is not working, first may come back inside. That's one warning sign, right? But the market gets too close, the market really doesn't come to travel that much, right? From here to here. There's not too much underwater money that we may have, you know, before realizing, okay, this trade is not working, right? This is the last thing, right? The last thing, the ultimate thing that, oh, okay, it's not working, right? If I didn't close here, if I didn't close here, if I didn't close because tempo was, there was just nothing. This is the last thing. Before reaching to this point, there are many signs that the market give us. That's one thing, right? We may, in the last couple days, I hope you have realized we had something really curious, right? We have this really narrow ranges bar, really narrow ranges. We have some wide ranges, and suddenly we have some really narrow range. I think this is the third day that we have something. We have something like that here. I believe it was this one, right? I believe we have something here as well. 3 days in a row. This one here, yes, this one here. Really narrow range. These are not the inside bars, but these are narrow range bars relative to the previous one that can give us some opportunities here as well. What is going to be? It was to the downside. It could have been to the upside, right? It all depend on context. That's what's called discretionary trading. We put things in context, right? To increase the odds. Now, the closer this period comes to this high, the higher the odds that this one is going to be taken. Are we one time frame higher even if A and B are at the same level? No. I believe right now we don't have direction yet, because we have inside bar inside another inside bar so far. Once one period takes the previous bar high or low, then we have direction. The odds now are increasing to the upside. Notice how wide that high is. What do you think traders were doing here yesterday? And now, if you think about that, think about what's happening today, what they are doing now, based on what happened yesterday. There's a tremendous break. They're going to be, I have to be short now. I need to short the market. I'm not going to lose it. I need to find some place where to sell. That level, that AB high, can be one of those places. Now, is that solid? Is that a good solid level? I don't think so, right? It doesn't mean it's going to be taken. That is just one piece of information there. What direction this market does have? It doesn't have direction right now. Relative to yesterday, this can be a rally, a rebalancing rally that we may have. But also, depending on what happens, look at these highs here. They seem really far, right? They seem really far. I was kind of distracted yesterday. I am trying to relax now. I had I realized I was just putting too much pressure. I guess that had to do with my anxiety. I was becoming so anxious. I was feeling too much anxiety. I was just putting too much pressure on myself. I'm trying to relax more. This could have been a good buy here. 42.30. What are the 42.30? How much are those 42.30? 42.30. Oh boy, $12. 12 points. Look at this. options here. 12 points. I want to see the 50 to 10. I know, I'm just checking here. I'm not planning to do anything here. 6 points. Boy, this is... So what do we do? What do I do now? I have a questionable high, very questionable high. I also have a questionable low. 1, 2, 3 levels here in the lower side. It just takes time. To be honest, today I was expecting a slow day, you know, some kind of backup or maybe a rotational day today. What do we have next week? What do we have next week? Oh, we have CPI on Wednesday. FMC? What? FMC? Huh. PPI on Thursday. And retails. The 15th. I think the 15th also we have some banks start to report. And look at where the market is, right? You got this range here. I bet this is right at the center. Okay, we have 52, 53, 50. 53, 50 minus 51.25, 51.25 divided by 2, 112 minus 53, 50, 52.37. No freaking way, it's right at the center. Gosh. Oh boy, this is right at the center, man. The market has positioned itself. God, man. I was thinking, remember, I guess what last week we were thinking before, what number we had? I guess Friday we have this number, last Friday. Yeah, I forget what this number was. I was expecting something like a break and then a rally, or a rally and then a break, and the market opening before that date, like a kind of around the center of this range, you know. But it happens, you know, now it happens before FMC, before CPI. God. Now the market has good excuses. I mean, the market is looking for some, maybe setting itself for something here, right? Either to make a new highs, good also making new highs with those releases. Next week we have CPI and we have FOMC. Can easily to come back all the way up to here. Maybe having a 53. What was this number? Let me check it again. 53.20. No, I don't have anything in the upper side. It's just too far. It's too high. Okay, maybe 1, 2, 3. I'm talking about the 53.50, which is a little bit higher than this all-time high. All right. And that's how that's okay. Now we have the election here. I want to see some. Come on, don't tell me you are selling from this. Really, market? Are you selling from this? It didn't get inside this. It didn't get inside this, you know, value area. There's no value area here. I mean, this is irrelevant today because there is no. This is relevant, right? This one, but not yesterday. I have a trending day yesterday. If any, this one is more important, no? This upper range here. But this is selling coming from this level here. All the market is stopping right there. It's telling me who is in this market. Right? It's an indication who is in this market right now. Now, okay, that being said, right? I know the relevance. I know how the relevance of this value here, right? It's overlapping, right? I know the relevance. If there is something to the upside, at least this value has to move inside here. How much the market has to do? It doesn't have to do that much to move value inside this, inside yesterday's. Because it's huge, it has a huge range here. Just moving inside. Just moving inside. If there is something to the upside, it shouldn't have any problems or issues, inconvenience moving value inside. Now this market has been has printed 3 periods side by side. It's 3 wide. The odds that this market is going to do some serious damage in either direction are not good. Odds of rotation are high here. Are increased today. It's still an inside day. It's an inside. This can end or close as an inside bar to the downside. Just where do we have an inside bar to the upside here? Here, this one. Yeah? We have an inside bar to the upside. Oh, but we have a break. Oh, okay, we have an inside bar and then we have a rally. That's the first thing. We have a tendency to think like that too. Try to get in the mind of your competitors here. And the only thing that we do here is this business is about ourselves. The only person who can beat us is just the market doesn't beat us. It's just me. It's just you that beat yourself. Oh. Hey man, I am just reading your last 2 comments, but I mean, it is true that you have to internalize a lot of things, right? When you start, it's just overwhelming. It's overwhelming. You say, how am I going to do this? This is going to be impossible. It's really impossible, and it's really hard. That's the part that many people, many traders don't understand. This is a hard business. Okay, we have penetration on this range. This level again. Now, if there's anything serious to the upside, I want to see some value building up here. The next period, keeping this distribution open, or start a new distribution up here. By the way, what was the number? I need to check the number. What was non-employment? Non-employment. Wow. Consensus was 200. Now we have 300. Gosh. That's huge difference. That's why we had that big break yesterday. Yeah, somebody knew that number. Somebody knew that the number leaked, man. That was a leak that we have there. What happened with that big number there is the Fed doesn't, the labor market is strong. That means that the labor market is strong. It's not showing cracks here. Hiring keeps being high, and the Fed can keep these rates higher for longer, and that's why we had the break we have yesterday. We never know. We never knew who knew, right? We talked about that yesterday, I believe. No, that that maybe somebody had their eyes on that number. That's why we got this break. That was the piece of news, the catalytic this market needed. Gosh, man, somebody. I mean, how you can compete with that? Can you see how you can compete with that? It's really hard. It's really hard. Oh, I was telling. Okay, let me see. Okay, do you remember what happened when at least when something starts to build, right? You can be the trader. I have noticed that you have some kind of bias to the upside today. And you can use this thing, right? You could have used this, okay. And we talk about the potential that this, market buying from Halbach. Now Halbach is way up here. There's a potential rally here because if there is something to the upside, this daily Halbach will be gone, and that's why I mark it here. So I have something there that I'm not going to forget. The base of this rally is not that strong. It doesn't mean it's going to break. Okay, it doesn't mean it's incredible how momentum can how long the distance the market can travel with momentum. Once the market gains momentum, this level is just curious to say the least, that how this level is being used again. The same traders here, using the same. I don't know if they are the same, right? But that's curious how that same level is being used as a support again, right? Inventory is extremely short here now. What a fader will do is be short in this market. The current action is to the upside. Now, coming back to what I was saying, at the beginning, when you start to record data, you write. Well, I used to write it, right? I used to write it so I can go back and check. That worked like for a week or for one day, because as soon as the market opened, all the things that I have recorded or written or observed or watched just go out of the window. You just forget. And after the season is over or after a movement happens, then you remember, oh my God, man, I had that, right? And it takes time. It takes time until, gosh, man, look at it. We were talking in the morning also how the pressure is to the downside. Look at these numbers, man. And tremendous amount of pressure to the downside, but the market just keep going higher. Right? And now we have a huge number here, and it is in the lower side. Notice how this is red, and now this is white. This huge number, there's a tremendous pressure here, but it's in the lower side. It's not even higher. It's more than this, but it's in the lower side. Huh. That's interesting. I have never seen it. I have another friend, Kyler. He has some FINCO or certification. I was thinking to do something like that. But you need to prove it. I don't have I don't have a background in economy or nothing like that. I think they're looking for those kinds of things. I don't know, man. I really don't know. Who knows? That's also always a possibility. And futures trading, futures is quite different than stock trading. The profile of a futures trader is different than the stock trader. You can find all kinds. There is actually no specific profile for futures traders. You will find some really specific profile for stocks. Hmm. Look at this. Very nice. Market just keep working his way high. This is the next thing. 57. I always also another thing that I have in mind. Always keep a watch. Keep an eye on your watch. Well, the next period have good also opening way up the current bar. I didn't have this were how much these were like 12, right? These were like 12, 24. No, wasn't 12. It was more than that. These were like 12, I believe. These were more. $50 to $30. Yeah, I guess I was checking this when the market was down here. I was checking this level here, this body here was. Okay. And let's keep that. Volume is decreasing, which is different watching lower volume in rallies than in the breaks. I see some potential rebalancing today. Okay. Relative to yesterday, we have a really wide range yesterday. It's still an inside bar. And you will notice, Jim, the memory, and you got. I have a lot of references here. I used to have even more than that. Jim's charts are cleaner than mine, and that I think I noticed that happens because he can remember more things. 50 years doing the same thing. Really, you get used to something, right? Something I've noticed also about this job is that because it's screen based, I had the same feeling that I had when I was younger and I used to play video games. You kind of like get addicted to something, and I don't like that. When I start to, I get anxious when I start to getting kind of like in the addicted side. I start to get some anxiety. Okay, look at that high there. Look at that high there. $52.50. What do we do here? Sometimes this can be opportunities to get in. Oh boy, look at it. Well, this is. It's right at this kind of like a decision-making level here. What do I do here? Go long, go short. This is an area where the market can buy, the market can sell from here. Which one is going to be? This was support before. Probably it's going to be resistance now. We have, and also it's right half back is there. Huh. What about this 52.30? Instead, where are you? Come on. 5200. I don't think so. 5230. What are 5230? No, not this one. This one either. 5230. Okay. Alright, I still don't see anything here. But I'm just wondering here, right? Let's see if this market can close this gap here. Can this do it? Does the market can the market keep momentum to the upside? Can the market have some upside continuation here? Remember, this came exactly from Halbach. We are at this key level here. Is not a bad place to expect sellers to appear here from what was support, now is resistance. I have short-term support here based on the market profiles. It could be either this one or this one here. You can see the market was bought from this area, then from this area, and then when it got through, went through, just, you know, let's do it, right? My trades have a tendency to take longer to now if you trade options, for example, you have, by any chance you had some options yesterday, when the market gets close to this level, you can hedge, right, with futures. You can hedge with futures, and then you can take some profits of those futures, right? Because this can be a level. This can be a level from where those, depending on how long the expiration date is on these things, right? You can take some profits here, and let again, right? And let again, because you have some gains here, some gains from the futures and from the puts as well. Still be positive, actually added to your profits here. And the options now are going to be completely free, plus some profits there. And this is a level, right? If the market takes this level, it's not a good area. The market can keep going higher, but it's in a specific area to measure risk. The next thing I want to see is closing this distribution, right? We have value lower. This trade is in the direction, but we have value lower. We have the distribution close. And then if the market comes back again, maybe this could be something Halbach, close to Halbach. You can maybe hedge again here, right? And that's another type of trading. That's kind of more if I'm going to call it upside. I mean, it's the advanced. It's harder. You need more understanding. I want to see this. I am. Oh, come on, man. I see this. I wanted to go short. I want to buy some puts here. It is not that I keep the first daily Halbach. It's just the fact that this was at the time was Halbach. It could have been this period, for example. If the market comes back down here, I can mark that one as a reference. But I did this because I saw some potential of rally here because of these highs here. And then also F was kind of close to this B. So there was some potential there. And if there was a rally, the daily Halbach was going to move higher. And this one, this level, which have been easily quite can be forgotten. Um, I am going to close, unless you have any other question, I'm going to call it a day because I cannot keep doing this right now. Um, but there will be just too much noise in the background. It's going to be better for everyone. But I will be posting. You can, if you have any question, you can keep doing this. You can keep doing that. You can keep doing. You can keep asking any questions in the Discord. I have my kids here. I cannot ask my kids to not be kids, right? All right. Thanks, my friend. I was glad to talk to you. Hope you have a good day. Stay safe. See you.